eToro has grown into one of the largest retail brokers on the planet. Public filings list over 40 million registered users, while more than 3.6 million of those accounts are funded, holding about $16.9 billion in client assets. That meteoric rise culminated in a Nasdaq debut on 14th of May 2025 under the ticker eTOR. The shares opened strong and pushed the company's market value to roughly $5.6 billion, a watershed moment that inevitably sharpened the question everyone keeps asking: is my money really safe on eToro? If you scroll through the eToro subreddit, you will find anxious posts. One user says his account was shut down after he spent a few months in a country where eToro isn't listed. Another describes waiting 3 months for a wire withdrawal to clear. Stories like these sound alarming. Yet, they rarely have anything to do with vanishing funds. They almost always stem from strict know your customer rules, anti-money laundering checks, and sheer customer service backlog. Still, they are a good reminder that popularity alone is not a safety metric. Regulation is. So, how exactly does eToro make money? First, every trade you place is matched inside eToro's market maker system. The difference between the buy price and the sell price, the spread, is eToro's bread and butter. In equity or forex trades, that spread is small. In crypto, it's wider, so crypto quarters like Q4 2024 give eToro a bumper payday. Second, the company reports these trading profits under a metric it calls net trading contribution. Blue bars are stocks, commodities, and currencies. Orange bars are crypto. It's already net of hedging costs, so what you see here is the money eToro actually keeps. Third, with interest rates above zero, cash you leave idle in your account now earns eToro interest income, shown in green. This slice has doubled in 2 years and cushions the business when trading volumes slow. Fourth, eToro Money, its debit card and currency conversion wing, adds grey blocks. Every time users swap euros to dollars or tap the card abroad, eToro pockets a thin FX markup and interchange fee. Finally, the yellow slice, subscriptions and other, bundles copy trading, performance fees, staking rewards, and a few smaller lines. Small today, but management says it's high margin recurring cash flow. Put it all together, and that's eToro's playbook. Spreads and commissions on trades, interest on cash, FX conversion fees, and a dash of subscription upside. Let's understand regulation now. In the United Kingdom, eToro UK Limited carries FCA reference 583263. Across the European Economic Area, eToro Europe Limited operates under CISEC license 109/10. Australia's traders fall under ASIC AFSL 491139. In the United States, eToro USA Securities is SEC registered and belongs to FINRA, while Middle East clients use an Abu Dhabi global market regulated entity. There is even a Gibraltar DLT license for the standalone crypto wallet. As a rule of thumb, if you are a European investor, you will be under eToro Europe Limited. You can check it when registering your account. What those licenses mean for your cash and investments. Because of that multi-jurisdiction oversight, client money sits in segregated trust or safeguarding accounts, completely ring-fenced from eToro's own operating capital. If the worst ever happened, the investment safety nets would kick in, up to £85,000 per user under the UK FSCS, €20,000 under Cyprus's Investor Compensation Fund, and $500,000, half of which may be cash, under the US SIPC. Shares, ETFs, and other securities are recorded in omnibus custody accounts, but you remain the beneficial owner. Regulators require that separation, so those assets cannot be touched to settle eToro's debts. As an important reminder, if you invest in cryptocurrencies, you will not benefit from the mentioned investment protections. eToro also buys an institutional policy at Lloyd's of London that can reimburse each client for up to €1 million, or the local currency equivalent, if the compensation schemes ever proved insufficient. Financial resilience. Post-IPO, eToro reports no net debt and more than $700 million in cash. So, is eToro safe? From a regulatory and structural standpoint, yes. Layers of licensing, mandatory fund segregation, investor compensation schemes, and a 7-figure Lloyd's policy combine to create a robust safety net. If eToro goes bust, your securities should be held in a segregated account and and returned to you. And if something happens, that's where investment protection funds come into force. Most horror stories online trace back to compliance checks or service delays, rather than missing money. That said, safety also depends on how you use the platform. Leverage amplifies losses, and CFDs remain high-risk products no matter how sturdy the broker. Stick to instruments you understand. Do that, and eToro is, by industry standards, a perfectly legitimate place to invest. Want to learn more about eToro? Check eToro's safety page in the description directly. Happy investing.